Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, after a whipsawed intraday movement on Thursday, the Australian dollar remains near the top end of its bull run since bouncing off that 60-day moving average, and along with that, near that 65, 70, 80 area, posted a weak Japanese hammer, which followed on to now close towards its call level of 67 figure 45. There is a weak engulfing candle posted from last night, but I feel with the current demand returning for the market, along with that with the technicals remaining to a positive bias, should lead further to the upside and look towards its target, as I mentioned, of 67 figure 45. If this topside level is achieved, it is advisable to reassess the situation in case we do see an extension on beyond 67.5 onto 68. Any pullback is likely to be shallow. Moving on to the euro, it exhibited a weaker bias on Thursday as the US dollar index, which measures the greenback strength against a basket of 6 major currencies, bounced from 105.25 to 105.60 this morning in New York. Meanwhile, markets were somewhat volatile across the board on Thursday after the Swiss National Bank surprised traders by cutting rates for the second time this year. While also looking to data this Friday, traders will be looking to the manufacturing PMI and the services PMI to further direction in support, which I feel should be bullish as there is some divergence when it comes to the bull case. So therefore the key support level is expected to hold around 106.70-75 and furthermore to lead on towards 107.45.80 and with the topside objective still around 109. The Japanese yen weakness extends as the US dollar bounces, as I mentioned, from 105.25 to 105.60, following the reopen of the US market, which was closed in observance of the Juneteenth holiday. Currently, market prices have surged into the Bank of Japan's intervention territory after rising for 6 consecutive days. Softer US economic data show that initial jobless claim figures from the US Labor Department displayed a modest decline last week, while new housing construction in May hit its lowest in nearly 4 years. Initial claims dropped by 5,000 to 238,000 for the week ending in June the 15th, and which was down from the previous week of 243,000. So turning to the technicals, I am very cautious at these current levels. As you can see, the market display very much a strong whipsaw price market and plummeted from 160 around to the lows seen around 151 to 152. This market is no doubt likely to find further volatility as it heads higher and again expects another whipsaw price action. Keep an eye on this support level, which is seen roughly around 156.50-70. A break there will give a deeper fall towards 152 to 151. But viewing the top side, I am very cautious, so for those trading should continue to monitor market carefully. British pound fell towards its key level of 126.40.50 after the Bank of England chose to keep rates unchanged at a 16-year high of 5.25% ahead of Britain's national election on July the 4th. Despite inflation reaching the 2% target in May, which was not a decisive factor in the Bank of England's decision on Super Thursday, markets perceived the decision as dovish. Nevertheless, I feel this level around 126.40.50 should hold and should attract bullishness and therefore look for a rebound back towards 127 to 128 and reassess from there. Conversely, a decisive break below the 126.40 support level could shift sentiment, potentially leading to a more pronounced bearish scenario, so do monitor carefully. To some surprise, gold rallies with the US dollar and now towards the level around 2,360. In light of how the market's viewed, the weak MACD does give some concern and therefore could see a rejection from current levels and look back towards the bottom side of range around 2,320 to 26. It is advisable to reassess the situation from your risk management just in case we do see a deeper fall if 2,320 is breached. Wrapping up with oil, it still remains in profit-taking territory since the rally from 72.80. As we get closer to the top side of the range, which I feel is around $82 a barrel, the market could take a downturn and look back towards $76 a barrel. Well, that's a wrap. Thank you for joining me, and as always, look out for the interest rate report, and I hope you enjoy the great start to the new weekend.